Welcome to the deep dive, listeners. One question always comes up, right? Figuring out what something's actually worth. It's a real head scratcher.
Yeah, it can be. Like, are you someone who just loves digging through spreadsheets, all those earnings reports? Or do you get drawn to those, like, mysterious charts, those candlestick patterns that some people swear can predict the
It's
market?
almost like two different worlds, right?
Totally. And those worlds, they're what we're diving into today. We've got technical analysis, and then we've got fundamental analysis, like two sides of the same coin.
Okay, so let's grab our detective gear, put on our thinking caps, and start with the first one. Technical analysis, or TA, for those in the know. It's all about looking at the past, right? Those prices, how much people were buying and selling, trying to predict where things are headed.
It's kind of like, well, some people compare it to reading tea leaves. But instead of tea leaves, you've got all those numbers and charts. The idea is that, how people feel about the market, like all that fear and greed that makes people buy or sell, that leaves a trace. And TA folks believe those traces, they form patterns. And guess what? Those patterns, they repeat, giving you a peek into the future.
So it's less about how a company's actually doing and more about like what the market thinks it's worth right now.
Bingo. One of the big things in technical analysis is this idea that, hold for it, the market discounts everything. So basically anything that's out there, good news, bad news, even those crazy Elon Musk tweets, it's already in the price you see right now.
Wow, that's a pretty strong statement. So are they saying like forget trying to find some secret information, you can't beat the market that way?
In a way, yeah. TA folks believe trying to guess how things happening outside will mess with the price. It's a total waste of time. They focus on the price itself. That's the real signal.
It's almost like saying don't worry about why, just follow the trend. But wait, how do you even spot those trends reliably? Charts can be kind of confusing.
Now that's where it gets interesting. TA has this whole language of charts and patterns. Ever heard of a head and shoulders pattern? That might mean the trend is about to turn around. Or moving averages, they kind of smooth out all the jumpy price changes to show you the real trend underneath.
So you're basically saying, learn this secret code and you can hear what the market's whispering. But hold on, you mentioned patterns repeat. Does that mean like those market crashes and bubbles, are we just doomed to keep seeing them over and over?
That's where the history repeats itself thing comes in. Of course, it's not like a movie replay exactly. But, human psychology kind of drives these market cycles. You get booms, you get busts. And TA folks believe they rhyme with what happened in the past.
Okay, so knowing those rhymes, it might give you a bit of an edge, but you're not saying you can predict the future perfectly, right? There's got to be more to it than squiggles on a chart. And that's where fundamental analysis enters the picture, the FA side of things.
You got it. Fundamental analysis, it's about taking that magnifying glass we talked about and getting up close and personal with a company's value. Forget whispers. We're talking about cold, hard facts here. What's this company really worth?
So time to ditch the charts and dive into those lovely financial reports, balance sheets, all that good stuff.
You know it. We want to know, is this company actually worth what the market says it is? Is it a hidden gem, or is everyone just caught up in the hype?
Sounds like we're financial detectives now, huh? Hunting for clues to see if a company is healthy and growing. What kind of clues are we even talking about?
Ooh, all sorts. How's their revenue growing? What about their profit margins? Are the people running the company any good? And how do they stack up against their competitors? For example, imagine a company says they're the next big thing in green energy, but their financials are a mess. Lots of debt, losing market share, that's a big red flag.
I'm already feeling like this is a lot more grounded in reality compared to all those chart patterns. A bit less mystical.
I hear you. But remember, every approach has its limits. Fundamental analysis digs into the why behind how a company is doing, but it's still relying on information that's already happened. History, basically.
So even if a company's doing great now, that doesn't guarantee they'll keep doing great in the future. The market, it's unpredictable, right?
Oh, absolutely. That's why it's good to know the different ideas behind fundamental analysis. Like there's this thing called the weak hypothesis. It says past market performance doesn't really matter for predicting what's going to happen to the price.
Hold on, so are they saying looking at a company's track record is useless? That seems a bit extreme.
Well, the point is, just because a company did well before doesn't mean they'll do well again. Then you have the semi-strong hypothesis. It's a little more nuanced. It says that all the publicly available info, it's already baked into the price.
So if you want to find a company that's truly undervalued, you got to dig deeper, find those nuggets of information that most investors haven't even thought about.
Exactly. And then there's the most hardcore one, the strong hypothesis. It claims that all information, Even insider secrets is already reflected in the price. This one's a bit controversial, to say the least.
So does that mean fundamental analysis is totally pointless if the market already knows everything?
Not necessarily. Even if all the info's out there, the market doesn't always get it right. A sharp fundamental analyst can still spot those gaps between what the market thinks and what a company's truly worth.
So it's not about finding information nobody else has, but about interpreting it better than everyone else. That makes sense. But hold on, how does any of this apply to the crazy world of crypto? Like, are we trying to read the tea leaves of Bitcoin now?
Great question. Crypto definitely throws some curveballs at both technical and fundamental analysis, and that's something we'll dig into a bit later.
Okay, so we've got these two approaches. One's all about market psychology, the other's about a company's actual value. But at the end of the day, aren't they both trying to answer the same question? Is this a good investment or not?
You got it. And that's why it's so crucial for any investor to understand both sides of the coin, both TA and FA. But the real question is, which one's right for you? That's what we're going to explore further in this deep dive.
Sounds like there's no easy answer, huh? Maybe it depends on what kind of investor you are, what you're trying to achieve, how much time you're willing to put into all this detective work.
You hit the nail on the head. But before we go there, let's get real for a minute. Let's look at some actual examples of how TA and FA play out in the real world. All right, so let's say you're kind of fascinated by this whole electric vehicle thing, right?
Yeah, EVs, everyone's talking about them these days.
Hot topic, for sure. So picture this. You're a technical analyst checking out, let's say, Tesla, right? And you see this pattern on the chart called a double bottom.
Double bottom, that sounds kind of...
Yeah, so it's like the price bounces off the same low point twice, you know?
Yeah.
Kind of like a trampoline.
Okay, I can kind of picture that.
And they might think, that means more people want to buy. Maybe the price is about to shoot up.
So they're not even thinking about Tesla's factories or, how cool their cars look, just those squiggly lines on the chart.
Yep, it's all about the patterns.
Yeah.
But meanwhile, our fundamental analysis buddy, they're doing something totally different. They're digging through all of Tesla's financials.
Like really getting their hands dirty in those reports, huh?
You got it. Looking at things like revenue growth, how much debt they have, how many cars they can actually make, even like how government regulations might affect the whole EV market.
So one person's watching the market's mood swings, the other's trying to figure out the nuts and bolts of the business itself. Couldn't they come to like totally different conclusions?
Oh yeah, absolutely. Our technical analyst might be super optimistic, bullish, as they say, based on that double bottom. But the fundamental analyst, they might be worried, like, hang on, is Tesla really worth this much compared to other car companies? Or what's going to happen when interest rates go up? Will people still buy expensive EVs?
Man, if I'm an investor, this is giving me a headache already. Who do I even trust? The market's gut feeling in the charts or the hard data and logic of the company's numbers?
It's tricky, right? But remember, both approaches have their strengths. Technical analysis, it's often the go-to for those short-term traders, the ones hopping in and out of positions quickly trying to ride those market waves. But fundamental analysis, that's more for the long-haul folks, the investors who care about a company's true value over time.
So like if I'm someone who gets a thrill out of day trading, jumping in and out, maybe technical analysis is my thing.
Could be. But even then, it helps to understand a little bit about the stuff you're trading. Why is the price moving, On the other hand, even if you're a long-term investor, mostly focused on fundamentals, technical analysis can help you get a better price. Like, wait for a dip, buy when it's a bit cheaper.
So it's not really about picking sides, it's more like having different tools in your investing toolbox. Speaking of tools, how does all this work in the crypto world? Those markets seem intense.
Yeah, you could say that.
No?
Crypto brings its own challenges for both technical and fundamental analysis. First off, it never stops.
Yeah.
Crypto markets are open 24/7. Those charts are constantly changing. For a technical analyst, it's like information overload.
And all that crazy volatility, those huge price swings, I bet that makes those patterns even harder to spot.
Oh, for sure. But the main ideas are still the same. Looking for trends, support, and resistance levels, those repeating patterns we talked about. The difference is those signals might disappear faster. And the risk, well, it's definitely higher.
Okay, so technical analysis gets even trickier with crypto. But what about the fundamentals? How do you even figure out what Bitcoin's actually worth when there's no company behind it, no CEO, no earnings reports?
That's the million-dollar question, right? And this is where things get really interesting. Traditional fundamental analysis. You got to throw that out the window. Instead of focusing on the financials, you're looking at the tech itself. Is the blockchain secure? Is the code good? Are they updating it?
So it's less about a company and more about judging a piece of software almost.
Yeah, kind of like that. And then you've got the community. Are there passionate developers working on it? Are people actually using it? And super important, what problem does this cryptocurrency even solve? Is it useful or just hype?
Sounds like you got to be even more of a detective in the crypto space. Those old school metrics don't really cut it.
Nope, not really.
Yeah.
You're also looking at things like transaction volume on the blockchain. Are people actually using it? And how are the coins distributed? Is it all in the hands of a few whales, or is it spread out among lots of people?
It's fascinating how you got to adapt those analysis tools for this whole new world of digital assets. But in the end, the big question's still the same, right? Will this thing be worth more in the future?
Exactly. And that's why understanding both technical and fundamental analysis is so crucial, even when things get as crazy as they do in crypto.
Okay, I'm starting to see the big picture here. But as an everyday investor, how do I actually use all this? Is there a magic formula for combining technical and fundamental analysis?
Well, sadly, there's no one-size-fits-all answer. But let me walk you through a scenario, kind of hypothetical, where both TA and FA come into play. That way you can see how it works in the real world.
Okay, lay it on me. What's the scenario where both TA and FA are working together?
All right, so imagine you're scrolling through the news and you see this company, right? They're saying they've invented this brand new battery tech, revolutionary.
Ooh, sounds interesting. Maybe something that could, like, change the whole green energy game?
Exactly. So our technical analysis pal, they see this. And what's the first thing they do? They pull up that stock chart. And let's say they see this pattern called a golden cross.
A golden cross. That sounds kind of ominous.
It's not bad, actually. It's where a short-term moving average crosses above a longer-term one. Could be a sign that things are shifting. A bull market's coming.
So the chart's basically saying buy, buy, buy. But wouldn't a smart investor want to, like, check things out a little more before just jumping in?
Oh, 100%. And that's where our fundamental analysis friend comes in. They'd be all over those financial reports, asking questions like, is this company actually making money from this new battery? What's their cash flow looking like? Do they have a ton of debt that could sink the whole ship?
So even if the market's going crazy for this company, those numbers might tell a different story.
Totally. The financials might show that, this company, they're still just getting started, still burning through cash, maybe years away from actually making a profit.
Man, it's amazing how these two approaches can give you such different views of the same thing.
Right. But let's say our fundamental analyst digs a little deeper, and they find out this company's partnered up with a huge car manufacturer, right? They're going to supply batteries for all their new EVs.
Whoa, now that's a game changer. Suddenly things are looking a lot more interesting.
Exactly. Now the fundamental picture is getting stronger. This partnership, it gives them credibility, a way to actually produce and sell these batteries on a big scale.
It's like all the pieces of the puzzle are starting to fit together. The market's getting excited. The company has a solid plan.
Right. So now our investor has to weigh everything. Think about their own risk tolerance, how long they want to invest, their financial goals, the whole 9 yards. And maybe they decide, hey, this is a risk I'm willing to take.
So how did they use both TA and FA to, like, make their move?
Well, they could use technical analysis to figure out the best time to buy. Instead of buying when everyone's hyped up and the price is high, they could wait for a little dip, a pullback, get in at a better price.
So they're using those charts to time their entry, even though they believe in the company for the long term.
Exactly. And then as they're holding their investment, they keep watching both the technical and the fundamental stuff. Maybe the price goes way up, higher than they expected. They could use technical analysis again to figure out a good time to sell, take their profits before things turn around.
So it's not just buy and hold. It's this constant process of analyzing, adjusting, listening to both the market's whispers and the company's actual numbers.
You got it. That's the power of using both approaches. You're not just betting on one thing. You're seeing the whole picture from multiple angles.
This whole deep dive has been really eye-opening. I'm starting to get why it's so important to understand both technical and fundamental analysis. It's not about picking one or the other. It's about using them together to make smart decisions.
That's the key takeaway for sure. And remember, it doesn't matter if you're looking at stocks, crypto, whatever. These principles, they can guide you.
Well, I definitely have a lot to think about, a lot to learn. But like you said earlier, knowledge is power. The more we understand these tools, the better we'll be able to handle whatever the market throws at us.
Couldn't said it better myself. So keep learning, keep exploring, and remember, finance, it's always changing. Never stop asking questions. Keep looking for those new insights.
That's some great advice to end on. Thanks for joining us on this deep dive into the world of financial analysis. Hopefully, you're all feeling inspired to put on your detective hats and start investigating.
Happy investing, everyone, and until next time.